Global markets rally as Greece blinks first. Prime Minister Sip-Ras urges his parliament to vote in favour of harsher spending cuts worth 13 billion euros. France calls the plans serious and credible. India's factories are still in the woods. Growth in industrial production slows to 2.7% in May. Consumer goods is the main culprit. Electricity and mining saved the day. Here's the big CNBC TV 18 exclusive. The panel on goods and services tax losers hope that the GST bill will go through in the monsoon session of Parliament. Sources say a majority of the members want to change the wording to say the centre shall pay compensation to states. But the GST panel's work is done. They will submit their report on the 17th. Government's coffers are ringing. 20% of the indirect tax collection target has been achieved in just the first 3 months. Revenues jumped 37% thanks to a whopping 50% jump in excise collections.
Our actions speak for our words. You know, we had one of our most active years was last year. Yeah. We put $1 billion of capital, and we've already put that same amount in the first few months of this fiscal year.
Temasek puts its money where its mouth is, makes $1 billion investment in India in just the first 3 months of this fiscal, the largest ever private equity injection in a single quarter. Shot in the arm for Jindal Steel and Power. The Delhi High Court orders the auction of coal mine from the Gare Palma mines, and JSPL also allowed to participate in the auction. The stock rallies. Auto major M&M seeks to ramp up its arsenal. Plans to raise 5,000 crore rupees this fiscal through debentures and commercial paper. Aims to fund organic and inorganic growth opportunities. The TCS stock slides after revenues missed expectations for the 4th straight quarter, but the company's digital bet starts to pay off, and it expects to beat the $3 to $5 billion revenue target in the coming years. India's top brick-and-mortar retailers meet Commerce Minister Nirmala Sitharaman claim that online retailers are flouting FDI rules and ask the government to come up with a comprehensive policy. On the hour, the Delhi High Court rules that luxury condoms are not essential drugs, so they cannot come under price control.
The Prime Ministers of Pakistan and India met today on the sidelines of SCO Summit in Ufa. The meeting was held in a cordial atmosphere.
Prime Minister Nawaz Sharif reiterated his invitation to Prime Minister Modi to visit Pakistan for the SAARC Summit in 2016. Prime Minister Modi accepted that invitation.
They agreed that India and Pakistan have a collective responsibility to ensure peace and promote development.
While India and Pakistan have always taken 2 steps forward and 1 step back, but today we saw a big step forward. The handshake in Russia has proved to be a major icebreaker. Good evening. Thanks very much for joining us on India Business Hour. But let's go straight to the big breaking story at this hour. And this is information that I am getting from my sources. The GST panel is losing hope that the bill will go through in the monsoon session of Parliament. Now, today was a meeting of the GST panel to go over the constitutional amendment bill clause by clause. And this is what I am given to understand, that the Congress stands isolated on a lot of its demands. In fact, the Congress had moved about 8 or 9 changes that it wanted. But on the crucial changes, when it comes to what the Congress wants to see as a pure GST, which means doing away with things like the 1% additional tax, those demands is where the Congress finds itself isolated. Where the Congress does find some support from other members of the GST panel is on issues like Clause 21. Clause 21 is where the bill currently says that the central government may pay compensation, and most members feel that may needs to be changed to shall. Some of the other changes that have been proposed and which have got support from other members of the GST panel. Remember, this is a 21-member panel of parliamentarians, is higher representation of state governments in the GST Council, and that is where the Congress has also got support. But on matters like whether electricity should be included, or matters like the 1% additional tax being done away with, even though the government acknowledges the fact that the 1% additional tax will have a cascading impact, will have an inflationary impact, the panel has chosen not to vote in favor of the Congress's demand to do away with that, but the Congress is isolated on that front. Now, what happens from here on? The GST panel's work is done. So their work is complete. They are ready to submit the bill to the government on the 17th, as was the schedule. And remember, the Parliament session kicks off on the 21st. And so the government will actually have the recommendations of the GST panel. The question now is, what then? Remember, this has to go through the Rajya Sabha. That's where the government doesn't have numbers. And I'm being given to very senior sources in the government tell me that the government can muster the numbers if it likes, if the Congress were to abstain, but it doesn't want to pass the bill through without the Congress's support, because remember, the GST is going to be ineffective. You're talking about creating a common market, and if you don't actually have the Congress states on board, then it virtually boils down to an ineffective goods and services tax. You're not going to be creating a common market, so the government is not keen to push this through the Rajya Sabha without the Congress being on support. They're still hoping for a last-minute miracle, a last-minute turnaround, but panel members at this point in time are not feeling hopeful or confident of the GST going through. Even the finance minister has been cautious on this. He's hoping, he says, that the GST bill will make it through the monsoon session. So the GST panel's work is done. There are at least 2 or 3 changes that majority members want, which maybe the centre will accede to, at least as far as the change of the language is concerned in certain clauses, and maybe the centre will give in to the demand for greater say as far as states are concerned, greater representation of states in the GST Council, because the majority of members feel that way. But we will just have to wait and see. As I pointed out, 17th is when the GST panel will submit its report, but it looks difficult, very, very difficult now that the GST bill will make it through the monsoon session of Parliament. And that begs the question, what happens to the rollout date of April 1, 2016? Because remember, it's not just about the Parliament here at the centre, it's about individual state governments also passing this through their individual legislative assemblies, and it will be very, very difficult for the GST to be rolled out on the 1st of April 2016. We'll try and get reactions to this story. Remember, it's something that we've just broken a couple of minutes ago. But on to the day's trading action now. A day of consolidation on Dalal Street. The markets were choppy, but they did move in a narrow band and ended with minor gains. The Nifty gained about 30 points as it attempts to make another dash towards 8,400, finally closing about 90 points higher, thanks mainly to the banking stocks today. Mid-caps underperformed in trade, with the mid-cap index ending marginally in the red, but it hasn't been a good week for our markets, with the major indices losing about 1.5%. But, you know, we really can't quibble too much given the kind of global uncertainty that we were dealing with. So it's 1.5% lower for the week, but we'll take that. On to the top macro story today. India's factories are still not out of the woods. After posting decent growth in the month of April, industrial output in the month of May has failed to maintain the momentum. Growth stands at 2.7% against expectations of 4.4%. Lata joins us now to wrap up the details. Lata, it looks like a sustained recovery is still miles away. How should we read this data?
Overall output number is definitely below street expectations, but there are flashes of good performance. Electricity has come in at 6%, largely in line with expectations. Mining is almost 3%, 2.8%. So clearly some mines have been restarted. And more importantly, basic goods, which largely comprises items like coal and which have a big weight in the IIP, have done well at 6.4%. So some parts are ticking well. It's capital goods and consumer goods that have let down badly, and that's why the overall manufacturing is 2.2%. But within that, capital goods did well for the last 3 or 4 months. These are lumpy items and do tend to flag. The output tends to be a little volatile. So perhaps one should not read too much. Maybe in a month or two, we could see capital goods coming back. And if you looked at the average of the capital good performance for the 2 months, April and May, then it doesn't look too bad. It's 4.4%. It is only when you look at May in isolation that it's a poor 1.8%. But clearly Clearly, the weak element is the consumer items. Consumption is weak. Overall, minus 1.6. Consumer durables is minus 3.9. And consumer non-durables genuinely weak at minus 0.1. Consumer durables has a big base effect, but otherwise it is still a weak number. So there are reasons to be disappointed with this number, but perhaps this is just one of the bad numbers. We have to look at it in a quarterly fashion.
All right, Lata, thanks very much. But let's head straight to the big international story. Greece is inching towards a third international bailout to avert bankruptcy and preserve its place in the Eurozone. The Greek parliament is all set to vote later tonight on the reform plan proposed yesterday by Prime Minister Alexis Tsipras. The plan calls for spending cuts to the tune of 13 billion euros. Many analysts say the new plan looks similar to the measures that the Greek government has been battling for months. Tsipras is fighting hard to quell a rebellion within his own party. Reports suggest a few members of the ruling party are against the plan and prefer to leave the currency union. Tsipras has told his party MPs, and I quote, "We got a mandate to bring better deal than the ultimatum that the Eurogroup gave us, but certainly not given a mandate to take Greece out of the Eurozone. We are all in this together." Michelle Caruso Cabrera joins us now live from Athens. Michelle, are we close to a deal? Can Tsipras quell the rebellion within his own party and get them to back austerity?
The rebellion within his party looks extremely small, and his party actually didn't matter all that much. Leading into his delivery of the proposal yesterday, he had gotten every other party to back him regardless, because most of the other parties desperately wanted a deal and their constituents wanted a deal. So getting something passed in this parliament you see behind me is not going to be an issue. The finance minister is addressing the parliament right now, defending the deal, saying that it is more equitable, even though it appears to be almost identical to the one that voters rejected just a week ago. The bigger issue is, can he get this deal through the rest of Europe? The French have said very good things. The European Commission has been fairly supportive, but they've always been supportive. The question is, what does Germany say? At this point, they've been pretty silent. Is this going to be a political thing, or is this going to be where the numbers have to actually add up? The answer to that question is going to make the difference about whether or not this deal can really get done before Sunday. Back to you.
All right, Michelle, appreciate you joining us. So Michelle saying that rebellion from within the party is not going to be an issue. And as Michelle was pointing out, we are seeing leaders from France, for instance, say that the plan that has been put forward by Alexis Tsipras is a credible one. So maybe we're closer to a deal. We're hoping, and certainly the markets are hoping, and that's what we saw playing out as far as the European markets were concerned. Stocks rising sharply today as investors took heart from a rebound in China and also the possibility of a deal in Greece. The frontline indices closed the day and closed them fairly strong, 3% higher on the DAX, 3% higher on the CAC, and almost 1.5% higher there as far as the FTSE is concerned. Across the Atlantic, a quick check on Wall Street, where shares were rallying on the back of that hope of a Greece deal. Dow up by about 1%, and similar story playing out for the other two indices as well. And China, let's look at what's going on there. Shares continue to rebound. The benchmark Shanghai Composite ended 4.5% higher. A slew of measures by China's central bank and market regulator appear to have worked, at least as of now. Analysts say the sell-off has brought the valuations of some Chinese stocks to levels where investors have reason to buy. The two-day rally brings good cheer, but the Shanghai Composite is still almost 25% off its June high. Adam Bakhtiar joins us now. Adam, what a comeback by the Chinese stock market.
We continue to see strong gains in the Chinese markets on Friday's trading session, boosted by the ongoing raft of measures by the authorities in Beijing to put a floor on the stock market rout, which at one stage has wiped out almost $4 trillion in market capitalization over the last 3 weeks. Take a look at the gains in the Shanghai Composite, 4.5%, and it was a broad-based rally across all of these equity markets as 60 more stocks came back to trade today. Remember, though, 1,300 are still suspended. But looking at the gainers and losers in the markets, there were only 6 stocks that ended the day in negative territory on the Shanghai Composite. In the meantime, we got fresh economic data that shows that perhaps the rout in the stock market is beginning to affect the world's #2 economy. Vehicle sales in China dropped for the first time in more than 2 years, falling 3.4% in the month of June. The last time we saw declines of that size dated all the way back to September 2012. Despite that, though, we did see of course, automakers continue to rise in domestic trade following, of course, deep sell-off for the last 3 weeks and ongoing support for the broader equity markets. However, the litmus test will come next week as the world's #2 economy reports a raft of economic data, including Q2 GDP, fixed asset investment, industrial production and retail sales. And the markets will be focused on that very closely.
Adam, appreciate you joining us with a wrap there of the Asian markets and what went on in China. Now, fundamentals in India are strong and the country will not be hit by volatility from Greece in China in the medium or the long term. That's the word coming in from Singapore-based private equity giant Temasek. And in what's a clear sign of the firm's commitment to India, Temasek has invested a whopping $1 billion. That's the largest private equity investment to date in a single quarter. Kritika caught up with the co-head of India, Middle East and Africa. Here's a slice of that conversation.
So when we look at volatility in markets like what's happening now, we kind of look beyond the volatility. Now, if I turn back and look at Greece, in Greece, I think we've entered what I would call uncharted territory, right? This has not happened before. In Europe, seeing a situation like this, and therefore we are watchful. We're looking at what that means for Europe. We're looking at what that means for the rest of the world. But we don't believe that there is a significant risk for financial contagion in Europe as a consequence of Greece. You talked about China. Yeah, I think the China volatility again, I mean, is something that we're seeing rebounding again, right? There was a lot of, yesterday the market recovered. But again, we feel that volatility and that market sort of movement is unlikely to have much of an impact on India either. The spill-on effect isn't that much. Okay. As we look at it, because people look at India for India growth, right? People look at India for India investment returns, right? And unless there's a huge issue around the world which affects sell-off in all markets, then India will get affected. But we don't believe that these will have a significant impact on India, which is why you've not seen the Indian market overreact.
If I look at the global exposure, it's, if I'm correct, first Singapore, then China, and then Australia. India has about 4% of the overall exposure currently, if I'm correct.
That's correct, yes.
So going ahead, given that last 2 years you've been very active in investing in India, would you expect this to catch up with the other global peers?
We had a very active year last year. We put more than $1 billion to work in India, right? And this year, we're already at that same number, at $1 billion in India already in this fiscal year. So our view is if we find the opportunities, we will invest. Okay. And we ended our year in Temasek with a net cash position, which means we're looking for places to put our capital to work where we can get our returns.
Okay. So last fiscal, you mean FY15, you invested about $1 billion?
Yes.
As a whole, so for FY16, you're already at...
we're already at $1 billion, yes.
At $1 billion. Yes. So would you be able to double that by the end of the fiscal?
Well, we certainly hope we can find more opportunities because we believe in the long-term growth in India. We are optimistic about what we can do here over the long term.
Well, that's Temasek betting big on India. But back to the macros now. The government's coffers are certainly ringing. The centre has achieved 20% of its indirect tax revenue target in just the first 3 months. And Sapna, who broke that story, joins us now with the details. Sapna, the government was hoping that those tax collections and the robustness that we'd seen in the last 2 months would continue. And that's what it seems like.
Well, yes, the hope and the expectation here is that this trend is now becoming sustainable. So if you look at the first quarter numbers, overall growth of 37%, but this is year on year, not month on month. The second aspect, of course, the numbers are now settling around 1,50,000 crores worth of indirect tax collections. Excise, of course, is the big hero in this. The collections, in fact, for the month of June, they have actually almost risen by around 50%. Of course, the impact of the excise duty hikes which had happened starting from last financial year, that impact is still playing out, so that has also played a major role. But this could also be indicating towards some kind of a marginal recovery in terms of industrial growth numbers, though of course the May IIP numbers have not turned in really well, but these are June numbers of indirect taxes, so probably the next IIP number could be slightly better. Having said that, even in terms of your customs collections, particularly gold is playing an important role here. Around 60 tons of gold imports have also happened in the month of June, so it's a kind of a trend right now, 60, 70 odd tons a month. 10% is
the customs duty on gold imports, and that is a major contributor to indirect tax revenues as of now. Going forward, the government is expecting that this number is going to sustain. Already 20% of the budget target has been achieved. So as of now, they are actually slightly ahead of the curve, because if you look at the budget required run rate, or rather the growth rate required to achieve the budget target is around 25%, and they're growing at around 27% for 3 months put together. So that would be a monthly growth rate of around not less than 30 to 32%, and we will not be surprised, Shireen, if the centre, or rather the finance ministry, would again like to comment on these numbers sometime next week.
Well, they will want to comment on these numbers, Sapna, if they turn out to be spot on with what you've reported, because these are good numbers, so the government will certainly want to talk about them. But let's get back to our top story, and Sapna, stay on with us, because we're talking about the GST, and we understand that the panel on the goods and services tax, which met earlier today to do a clause-by-clause review, members are losing hope that the GST bill will in fact go through in the monsoon session of Parliament. Now, sources say a majority of the members want to change the wording in clause 21 to say that the centre shall pay compensation to states as opposed to may pay compensation to states. That's just one of the demands that the Congress party had made, where it has found support. But on some of the other demands, and I believe there were 8 to 9 changes that the Congress had proposed on the demand of a pure GST, which means doing away with things like the 1% additional tax, the Congress finds itself isolated. Joining us now is Prateek Jain of KPMG. Prateek, the select panel is expected to submit its report to the government on the 17th, and so while the select panel's work is done, Parliament is a completely different story. But as far as that 1% additional tax is concerned, and here, the Congress will get support from corporate India, because everyone we've spoken to has spoken about the cascading impact of that 1%, but the government has been clear they needed to bring that 1% in to try and buy state governments to vote along with them to get the GST through. So 1% stays as of now, is what we're given to understand, even though the Congress raised apprehensions.
Yes. So I think this 1% should go. I mean, I think industry voices has a lot of force here. 1% clearly goes against the principle of GST, and therefore one would expect that 1% should go. And I'm actually with Congress on this one. However, even if 1% doesn't go, I think it is very, very important for the government to clarify that 1% only applies in the first movement from one state to another, and the subsequent movement to the same product will not be subject to tax. And I understand they have set up a subcommittee to examine this, that there should not be cascading impact of this 1% beyond the first movement. But if that is not clarified, then it will be very, very unfortunate, because by the time the goods reach the end customer, you might be talking about 4 to 5% and not 1%. So
Absolutely.
I think this 1% should ideally go. If it doesn't go, then it should be clarified. There's only first movement which is liable to 1%.
Okay, but Prateek, as I said, that the Congress may issue a dissenting note, its members may issue a dissenting note, but the select committee is going to go ahead and pass its report on to the government on the 17th of July. The question now is what happens in Parliament, and what we are picking up from our sources is that the government is unlikely to try and push the GST bill through the Rajya Sabha if the Congress is not on board, because then this whole business of trying to achieve a common market, a single market, is going to fall flat on its face if the Congress-run states are not on board. So they are hoping for a last-minute miracle, a last-minute turnaround as far as the Congress position goes. But if the monsoon session is missed, April 1, 2016, tough, impossible?
Yes, I think it will be very tough. I mean, it may not be impossible. I mean, nothing is impossible. But I think if monsoon session will miss, then it will go to winter session. And that would mean that the time is really, really less for us to have the draft and the final law, etc. So I think if we miss monsoon session, then April 116 is extremely unlikely. It would then move to July or October. One would still hope that it doesn't go beyond 2016 at this stage. But yes, I mean, it will be unfortunate for the industry, for the country, if we miss the monsoon session.
Yeah, and That's what the government is hoping, that the politics of the day will be set aside and perhaps we will see this bill be taken forward, because the Select Committee has done its work. It will submit its report on schedule on the 17th of July. So the government is hoping for a last-minute miracle and a turnaround as far as the Congress's position is concerned. Pratik Jain, appreciate you joining us with a quick reaction there to the CNBC TV 18 exclusive tonight. Now, the big national story, it was the first structured meeting after 14 months as Prime Minister Narendra Modi held bilateral talks with his Pakistan counterpart in Russia. The handshake possibly opening a new chapter in Indo-Pak relations, sparking hopes of a thaw in ties between the two countries. Pranay Upadhyay reports from the chilly Ufa in Russia, where the ice has been broken.
Prime Minister Modi and Sharif held bilateral talks today after 13 months, resulting in a refreshingly unexpected joint statement.
Both leaders condemned terrorism in all its forms and agreed to cooperate with each other to eliminate this menace.
Both sides agreed to discuss ways and means to expedite the Mumbai case trial, including additional information like providing voice samples.
That Pakistan didn't specifically mention Kashmir in Samjhauta trials reflects its changing mindset. NSA-level talks re-emphasized that India is keen on talks only if the security situation improves. Pakistan has been wanting their foreign secretary to visit India, but that has still not been announced. Progress made on the Mumbai trials as well. The two countries have decided to discuss ways of expediting 2611 trials and providing Lakhvi's voice samples as evidence.
बहुत शुक्रिया आप सबका, लेकिन दोनों फॉरेन सेक्रेटरीज ने मेरा ख्याल है कि वो अपना ड्राफ्ट बनाया है और उसको. Are you happy with the development, sir? Satisfied? Yes.
Skeptics question if a happy Nawaz Sharif means a happy Pakistan army, the real powerhouse in Islamabad. Back home, the BJP has claimed political victory. The Congress meanwhile calling the Prime Minister a hypocrite.
पहली बार पाकिस्तान ने जो हमारी डेफिनेशन है टेररिज्म की, कि टेररिज्म सिर्फ एक नापाक, एक ईवल और टेररिज्म के बीच में आप किसी तरह का नुआंस नहीं रख सकते हैं, ये पाकिस्तान ने मान लिया है.
I'm just now saying that this highlights the immensely puerile behavior of the BJP when we were in power.
The biggest takeaway is commitment by Pakistan in sharing the voice sample for trial of Mumbai perpetrators. Tiered structure for bilateral talks have also been chalked out to address the issue of terrorism and border tensions. However, commitments and assurances have been there even in past. Therefore, the delivery of promises could only ensure the way forward. With video journalist Anil Sood, this is Pranay Upadhyay from Ufa for CNN IBN.
Well, whether this breakthrough will be meaningful or not is what we have to see. On that note, it's time for us to wrap up this edition of India Business Hour. Lots of developments expected on Greece, so stay tuned to CNBC TV 18. Over the next 48 hours, we'll be live with the action and the coverage from Athens. Thanks for watching.
The developments in Greece and Europe over the weekend impact Indian stock markets? A panel of experts, including Michael Avery of Rabobank and Richard Gibbs of Plantagenet, will decode that for you.
Domestic institutions have overshadowed foreign investors in the Indian markets in 2015. Two top-notch fund managers, Manish Gunwani of ICICI Prudential and Navneet Munod of SBI, will join in.
How will the government's thrust on renewable energy make a difference to Inox Wind? We meet the management of that company. Catch all that and more on Bazaar on Monday starting 8 a.m.